How's it going, everyone? Welcome back to your favorite Satoshi Club, where we have a little bit of a different video planned today. Or should I say, I have a little bit of a different video planned. We're going to talk about my strategy when it comes to trading, crypto, forex, and whatever else you can imagine. Now, this is a timeless strategy, so it is something that I've backtested in the past, like 10 years. And I want to show you a little glimpse of how I find opportunities. And this polygon chart, or MATIC, I did talk about it in the previous video. It is quite interesting, right? Because we do have reversal patterns, we have continuation patterns, and generally it's a chart where I feel like I can explain a lot about what I do when I'm trading. So for those of you that are in the trading world, for those of you that are trying to learn how to trade, this is probably the perfect video to get you started, because I'm going to go over a few very important concepts that you should know, that everyone should know when it comes to trading both cryptocurrencies or anything else using technical analysis. Now, first, I would like to say that I don't solely use technical analysis to trade. I'm one of the rare people out there who use both technicals and fundamentals to find as much information as possible, get them together, and form a good probability trade that will bring me money, right? So one other thing that you have to know before we get started is that there is losses in this strategy. As always, there's wins, but the whole point is, and this is very important, you can get small losses, you can have small wins, you can have big wins, but you should never have a big loss, which is what trade management, why trade management is so important, trailing your stop loss, etc. But it will take me probably around 20 videos to explain this whole strategy to you, but today I'm gonna show you everything. So let's get started. We have first of all a nice reversal pattern up here, right? So this was the top of the market. This was when the Fed said they're gonna start increasing rates, they're gonna hike rates, and basically the market took it as a bearish move. Now, one thing that you got to notice is that I do have a lot of different indicators on my chart that I use. So first of all, I use these moving averages. So this is the 200 period moving average, and it basically represents the market average movement over a longer period of time, right? So this is the average for a longer period of time for 200 periods on the chart, and this is the average for 50 periods on the chart. Now, one thing that you can notice is that the price is being held up by this 50 period moving average. So we could say that the 50 SMA is acting as a level of support. Okay, and at this point you're thinking, let me actually engage the replay button, right? So let's just go right here. Now at this point, you might be thinking, okay, this could be a nice short opportunity. Why? It's pretty simple. Well, if you plot this right here, it does look like a inverse head and, or not an inverse, just a head and shoulders pattern. So you have the left shoulder, you have the head, and you have the right shoulder. So that's already two confirmations, right? We have a zone of support, we have the head and shoulders pattern, and we're having a break happen right now. So an additional confirmation for me, and what I'm looking for right here, is for a break of this level right here, because it does represent a zone of support. It also has the 50 period moving average and also candles that have a strong rejection from the downside. So what I look for there is, let me just engage the replay button if I can find it. So let's just go one candle up ahead. Oops, that was two candles. Okay, so one candle ahead, right? So what we can see right here, if my internet decides to load in a second or two, there we go. We can see that the next candle, right, made a break and a close below this area. That's exactly what I wanted to see. Now, what am I looking for right here to enter a short position? And by the way, one thing that's important is also picking your target, which is going to be the next zone of support right down here. Well, when I'm looking at this chart right here, what I want to see after a break of this significant zone of support is the next candle to make a wick up first and then break the low of the previous candle. As it's breaking the low, this is where I enter my short trade. So how does this look? Well, let's say I just place my order, or I'm usually looking at it in real time. I put my stop loss below above the previous candle, and then I just set up my trade like this, and I'm waiting for the next daily candle. So what happens on the next candle? Well, as we can see, it just went all the way down. Now, this is something that I would have caught because you can see the wick up, it happened before the candle moved down. Now, how do you know it happened before? Well, it's pretty simple. It's a bearish close of a candle, so it had to have moved down after moving up. This wick up is a liquidity grab. It's grabbing the zone of resistance once again, and sellers are then pushing it down. And it's just a perfect high probability trade that as this low right here is broken, so this low of the previous candle, as it's broken, I enter a short position. And if you let the chart go, you can see that it did hit my target hypothetically. Now this is something that I did implement over hundreds of trades over the past 2 years, but just for example's sake, I'm doing the back test right now, so I'm not just trying to show you past opportunity that we can see in real time and just trying to look smart. No, I'm just simply trying to explain my strategy. So let's just keep replaying the chart for now, right? Let's see these daily candles and how they're forming. And we did take a win right here. That is 1.7 times our investment. For me, since I risk 2% per trade, this would be around 3.4 or 5% of a win. Now let's remove this for now and keep replaying the chart and see what happens later on, right? Now, oh, what did I just do? Okay, never mind. So what we saw later on is another example of a reversal pattern, but from the downside. So we had a neckline right here that was broken out of, and also head and shoulders pattern. So we have the left shoulder, we have the head, and we have the right shoulder. It's all inverse though, it's the same. It's just a technical indicator. Now, what am I waiting for right here? Well, it's pretty simple. I also have a zone of resistance right here that I do want broken out of if I want to confirm an upwards move. So we wait for a break of this level. We have a strong bullish candle, and the next bullish candle makes a wick down first and then breaks the high of the previous candle, as you can see right here. That would be my entry for a long position right here. My stop loss is always below the previous candle, and my target would be somewhere around the strongest zone of resistance that I can find, which is right up here. So theoretically, if I did take this trade, it would still be running, right? And I would put my stop loss, and here's the thing about managing your risk. There's no reason for me to leave my full stop loss at this point, because if the market keeps moving down, it basically just invalidates the trade, because we are having a correction pattern forming right now, or a continuation pattern, which will be my next point. Now, if the price just breaks down and keeps moving down, I'm going to be stopped out and I'm going to take a 2% loss. There's no point in me allowing the trade to do that since it already went so far in profit. So what I'm going to do is I'm going to trail my stop loss to the break even level or just a little bit above. And now I'm set. Now, even if the price comes down and stops me out and then keeps moving back up and then breaks this level right here, I'm at zero and I have another opportunity to enter this same trade. How will I enter it? Well, I'm waiting for a strong break on the daily time frame. So this is future, right? I'm telling you about an opportunity that you can have a few days from now. So you see a strong break and then the next daily candle making a wick down and breaking the previous candle high. And that would be my entry for this correction pattern and for this potential trade. Obviously, stop loss going below the previous daily candle and targeting the same level right up here. So that's a little bit about the strategy that I use, and I hope you can find this interesting. And over time I will be releasing a little bit more of sneak peeks, may even make a course of some sort in the future, but everything for free. I just want to get my knowledge out there to help you trade successfully just like I do. So that's it for today's video. Hope you all enjoyed it. Make sure to leave a like, subscribe to the channel, check out the Satoshi links down below, and I will see you all in the next video. But first, I'm not a financial advisor and you should do your own due diligence before investing into anything in the crypto or Forex world. Thanks for watching, guys, and see you in the next one.